All right, let's answer some of your questions now. Stephanie Link, you are up first from Bob in Michigan. Should I hold, sell, or add to my position in VF Corp?
I would buy some more VF Corp at this level. Stock is down 40% year to date, trades at 18 times forward. I think those earnings are trough levels. You're getting a 3.3 yield. And that 3.3 yield is important because it's actually very well covered. They have $5 billion in cash. So that's a very big positive. Look, the quarter wasn't great. The guide really was bad, but digital is starting to really accelerate for them. U.S. stores are just beginning to start to open again, and China is now positive for them. So stay patient, nibble on the down days. That yield is one of the reasons you buy it, though.
Okay, Josh Brown, I have a question for you now, and it is from Joe in Dublin, Ohio. Should I sell Luckin Coffee at a fraction of what I paid or hold long term? I'm sure lots of investors have the same question as I look at the stock trading at $2, up 54%.
So this is my favorite part of like building off a small base we talked about earlier. It's up 54% today. Must be a huge winner. No, it was $50. It's $2. All right. Yeah, you should. If you don't know why you're in it anymore, other than the fact that you're down, you should probably sell it. I'm not saying it couldn't go back to 3 or 5 or 7. But I think this is how you pay your tuition to the market. This is how Jesse Livermore paid his tuition to the market 110 years ago. And you're no different. Everybody has to take losses to learn. I could tell you my own war stories of being wrong, but they won't mean anything to you. You were wrong here. You should own that. You should take the loss. And every time you go to do something else stupid, say to yourself, do I want to be back in that position? Or should I think more about this? So I did it. I've been killed in stocks like this. I'm glad that you had a chance to learn this lesson. It won't be the worst thing that ever happens to you. Don't be upset about it.
Okay, Jim Lebenthal, to you from Barry in Worry, North Carolina. What is your outlook on Raytheon within the next year?
Yeah, so listen, there's a technical aspect to this, which is that the companies, Raytheon and United Technologies, just merged last month, which means they have yet to report a quarter as a merged company. The analyst community doesn't know what to do with that. They're sitting on the sidelines. Well, you know what? I do model my own estimates. I see a 10 times enterprise value to EBITDA multiple gets you to $80.80. And as you get to the back half of this year, the analysts are going to start coming out and crowing about it. I think this is an easy buy right here.
Okay, Michael Farr, to you from Mario at the Real Rio 5. Can you name a cheap stock with high volatility or high dividend that can pay out nicely in the long run?
I think I could probably name 1,000 of them. The question is there anything out there you really want to own? Remember what Josh said earlier, buying something that's just down because it's down and looks cheap is not a good reason to buy it. Buy something where there's some there. I'm going to go back to my pick on Valmont. It's an infrastructure company. They make light poles and utility poles. Any infrastructure spending bill benefits. The stock's 14 times earnings, has a little bit of a dividend. I think you can make some money there. Don't go too far out into the thin branches when the market's trading 10% off its all-time high. Be careful.
All right, we'll go quickly through round 2. Stephanie Link, Bristol Myers from Srini in Pittsburgh, Pennsylvania. What do you do now?
I like it. I own it. I would hold it for the 3% yield, but I prefer AbbVie. It's much cheaper and has a 5% yield.
Josh, Douglas in California. I'm looking for exposure to the healthcare sector without single stock risk. Thoughts about the XLV versus the IBB or the XBI?
I own IBB and XBI. IBB is already broken out. I think XBI is on the verge. Two different ways to own the entire sector and not take a big bet on one particular drug. That's what I like to do.
Jim, Susan in New York wants to know your thoughts on Marathon Petroleum. Is it a buy?
Yes, it is. Hi, Susan. Look, Marathon almost sold the Speedway retail chain to 7-Eleven in March for $22 billion. The deal got pulled because of COVID, but as we come out of COVID, let's see if that deal reemerges. I'm willing to wait and see.
Michael Farr, lastly to you from Jay in Florida. What are your thoughts on Medtronic?
Jay, I like Medtronic. I own Medtronic. It's a great balance sheet. They've got not too much debt. They've got a 2.5% dividend. And when they start doing those elective surgeries again, Medtronic's all over it. I like it.
All right. Thank you, guys. Thanks for the questions as well.